Back again with a trade review and recap of today's trade, which is a long I took on the micros. Here's the recording of it. I will talk it through. It's just a scalp, not a huge trade, but a winning trade nevertheless. And yes, I went long on fresh all-time highs. So let's play it, see what's up. So the market, as you can see, is trading down into these series of down close candles right here. I'm going to annotate those right now. I'm doing that live. This over by the sell button. This is my current mouse. What you're seeing in the crosshairs right there is me actually live doing it. So I'm looking for it to kind of get back to touching that annotated line that I put in right there. Get kind of the proximity of that so I can just kind of enter a trade. Good enough, right? Inside this this is a 5-second chart right here. So it's inside this 5-second fair value. So I'm just adjusting the orders, and putting in where I think the market is likely to go to, which I already have it kind of set up right here. Right here, I have this grid, this projection graded. My target for the day is right here, 27,890. I'll get into that after the video of why I have that target and what I'm looking for. So what I did right now is I measured this series of down close candles, which I'm looking as a propulsion block to send price higher. And I want to see the market, there's the 50% right there. I want to see the market stay in the upper half. So currently right now, I'm going to soon adjust my take profit because it's just kind of putting, not really a random place, but I fine-tune it a little bit to get closer to this 25% level right here. That's kind of the low-hanging fruit objective for me. Again, this is not kind of the clearest views. Measuring it up, just putting it kind of ahead of there, measuring this range from here to here, just looking to get kind of a low-hanging, half a standard deviation move from there. Very simple, within the context of this sub 1 minute framework and the higher time frame framework that I'm also working inside of. And boom, there it is. Real easy. So now I'm going to review the trade logic. At the daily chart, see that the market is extremely bullish. It is down close candles are supporting higher prices. We got plenty of breakaway gaps. Once the market made a new all-time high, traded into it, pushing higher. This is not a market that I look to short. So many times you get caught trying to short a very strong market, and it's not what I'm looking to do. So I'm going to drop down to the hourly chart. On the hourly chart, I'm looking at this range here from yesterday, or from Wednesday into Thursday. We have this Asia session range here, from the low to the high. And so this is the FOMC low that was put in, and then that was the high. So I'm measuring that range low to that range high. And this is an OTE, optimal trade entry area, and then a projection of half a standard deviation from that last pullback. As you see, the market took out the high with a very, very contained, high resistance retracement. That's not bearish. It's not a bearish signature. There is a hourly fair value gap right here. We're basically buy side imbalance and slight inefficiency. And I only have the high marked in because as I was annotating in the morning before I was doing my analysis, I don't really need the whole thing, right? Because I can see that it's holding in the top. And if this thing's going to go heavy, well, that's going to leave a breakaway gap. And, it should be off to the races because it's making all-time highs. And that would be a very low-hanging fruit objective for an hourly expansion that I'm looking for. So drop down to the 1-minute chart. The market opens up right here. Boom. Shoots up. Doesn't fill in the whole gap. That's a gap and go. Waiting for the first pullback, which is right here. So the first pullback, notice that it's holding the fair value gap. It does not fill it all in. Breakaway gap. Okay? Breakaway gap. Breakaway gap. Breakaway gap. Small breakaway gap right there. I'm looking for the market to support higher prices right here. All I'm doing is grading that high to that midpoint, or not midpoint, that negative 0.5 standard deviation from that hourly move. And I want to see the market kind of use it as a ladder to send price higher. And that's what it did. Low-hanging fruit right there. That is what I exited in. So not a huge trade at all, but a good trade nevertheless. So once it came back down into this fair value gap and the market pushed up higher, I'm utilizing this as a propulsion block to send price higher, and the market should stay in the upper half of it and send it to the target, which it does. Didn't leave a runner. Small position because I am buying highs. So there is a little bit more risk, but I've backtested this and seen it done hundreds of times. So I'm comfortable taking it at a reduced risk. And that is the trade. Dozens of dollars made.